Thanks for joining us on Lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Ira Dugal. Let's get you the headlines. Indian equity benchmarks ease morning gains. Sensex is down over 100 points. Nifty hovers around the 10,800 mark.
The Reserve Bank of India has given banks a 1st of October deadline to link all new floating retail and SME loans to an external benchmark.
The Committee of Creditors of Jet Airways has allowed two entities, the Synergy Group and the RA Creator Group, to proceed to the next round of bids.
UK Parliament rejects Prime Minister Boris Johnson's plan for a general election the day after it shot down a no-deal Brexit.
All right, let's first take a look at how markets are faring. Yatin is here with us. Afternoon, Yatin.
Afternoon, Ira, and after a strong start in the morning, we are down almost 10 points on the Nifty. So clearly, the trade has been range-bound for the last one or two trading sessions. In fact, today, if you look at the Nifty 50, that's down about 0.2%. However, like yesterday, we are looking at Nifty Bank, which is scaling higher volatility, 1% down for the Nifty Bank. Of course, the Nifty 50 advanced client ratio is 3:2. However, a bulk of the gain is coming in from the PSU pack. The entire PSU pack is buzzing in trade with gains of over 5-7% on an average for the large cap names. In the gainers list, we have Tata Motors. That stock is up 5.5%. And rest of the top 5-7 gainers after Tata Motors, everything is a PSU stock. So BPCL, ONGC, Coal India, IOC, all of these stocks up anywhere between 4.5% to 5%. What's dragging the Nifty lower is HDFC. The mortgage lender shares are down nearly 2.5%. Over concerns that probably the Reserve Bank of India's circular yesterday would put pressure on the net interest margins moving ahead. So that stock is under pressure. Along with that, ICICI Bank, HCL Technologies and Hindustan Unilever, HUL, all of these stocks are down anywhere between 1.5% to 2%. What's active in trade is the likes of Yes Bank, quite active on the future and option segment, 2% up for that one. So clearly today that stock is bucking the trend. Apart from that, a lot of open interest additions seen in Tata Motors, ONGC, as well as HDFC Bank. HDFC Bank at this point in time is down nearly 0.6%.
Thanks for that. The Reserve Bank of India has set a 1st of October deadline for banks to link all new floating and retail and SME loans to an external benchmark. The banking regulator, which had put the plan on hold earlier, has also given banks the options to choose from. Vishwanath is standing by to tell us how this is going to work.
So as far as the announcement that came in late Wednesday night, the Reserve Bank of India has said that it is mandatory now for all banks to link the new loans to retail as well as MSME customers to an external benchmark of their choice. Now, the Reserve Bank of India has obviously given a list of these external benchmarks that they can choose from. So let's take a look as to what this structure is going to look like, and finally what it is going to impact, how it is going to impact the lenders as well as the borrowers. So firstly, let's look at the list of all of these these benchmarks that the Reserve Bank of India has said can be used for linking the lending rates. Firstly is the RBI repo rate. Remember that there has already been a number of public sector banks which have come out with a list of retail lending products linked to the repo rate. So they are on their side already starting this process. Private sector banks will have to begin as time goes by. The second one and the third one is basically the Treasury bill 3-month and the 5-month rate, as well as any other benchmark that will be published by the Financial Benchmark India Private Limited. So these are primarily the rates that the lenders can choose from. Next, just to take a sense of how exactly it is going to work for existing borrowers. Now, earlier the RBI's guidelines were specific to new borrowers. With respect to the existing borrowers, they can shift if they have a floating rate as well as are eligible for prepayment without any penalties. They can shift without any cost to the new lending rates. What is the final lending rate going to look like for an individual customer? So firstly, there is a benchmark rate which obviously the lenders will choose from the list. Next is a spread that the banks can set upon this external benchmark. This spread includes a credit risk premium, which is essentially depending on the quality of the borrower. And next is the operating cost, which is the cost that the bank incurs on giving out these loans. As far as the credit risk premium is concerned, the bankers can change that credit risk premium. Let's go back to the previous chart. The bankers can change that credit risk premium specifically in the event that the credit profile of the borrower changes materially or as well as the operating cost can be fixed every 3 years according to the RBI norms. Now let's take a sort of a look at what this means for the banking sector. Now, as far as the banking sector is concerned, now we've seen SBI as well as Punjab National Bank bring out repo-linked lending rates, and there, as you can see, as compared with the MCLR, the repo link rate is considerably lower. So that is going to go ahead and impact some of the private sector banks as well as the public sector banks who are yet to introduce these products. According to Credit Suisse assessment, this difference is about 30 to 60 basis points. So that is going to affect their net interest margin as well as overall profitability, and therefore that will play into their future results according to the analysts. For the customers, the pros, of course, is that primarily you will have a proper, transmission of these lending rates as soon as the RBI cuts the repo rate. But on the flip side, as far as volatility is concerned, with these rates moving, quite in a volatile manner, that will impact their EMIs. And bankers have previously warned that if EMIs change more volatile in a volatile manner, that could impact their ability to repay these loans. So these are primarily the pros and cons as far as the customers as well as the banks are concerned. Finally, as far as the individual banks are concerned, ICICI Bank is going to see probably the largest section of their loan book move to an external benchmark link rate, while some of the more private sector banks like HDFC Bank as well as IndusInd Bank, where they have a high proportion of loans linked to the fixed rate, they will have a smaller impact because only new rates will be linked to the external benchmark. So this is primarily how things would move for these banks.
Thanks so much for that. Let's go across to PK Gupta, Managing Director at State Bank of India. Is joining us on the phone line. Mr. Gupta, thanks for joining us. Sir, your understanding of how this will play out, I know you already have a product, but from 1st October, all new products will have to be linked to the repo rate?
Yeah, see, we already have a lot of products which are linked to the repo rate. I think the difference it makes now is that as per the circular, so all the new products which the RBI has specified will be linked to the external benchmarks. See, right now, for example, we have the home loan product, but we have the MCLR product also. So the customer have a choice to take any one of those two products actually. But I think the MCLR linked product obviously will have to be withdrawn from 1st of October. So we'll rework and see how do we introduce this new product actually and how we go ahead. But, the issue always for the banks would be is that, we are doing it on the asset side. We'll have to work out some mechanism on the liability side also so that, we can work with our NIMs actually that we have been having.
Mr. Gupta, how does life change for a floating rate borrower, an existing borrower, once this kicks in?
Yeah, I think that is where the challenge for the bank would be actually because, as a bank, we have a quite substantial home loan portfolio. So the moment we shift actually the existing portfolio over a period of time to the benchmark rates, so what impact it will have actually and how do we ready ourselves to see that, we get the same kind of benefit on the liability side is something as a bank we will have to work it out actually.
Mr. Gupta, two questions. So on the liability side, is the first or easiest option to link make your bulk deposits linked to a floating rate system? I think your chief economist had also recommended that that's an option.
Yeah.
Is that the way to go?
See, there are a lot of options, but, our experience is that one bank doing it doesn't work actually. I think the whole ecosystem has to develop actually. And if there are regulatory guidelines, it helps actually. So we'll have to see how it goes. As a banking industry itself, now that everybody will have to do, till now we had taken the lead actually doing these products on the asset side. Some public sector banks have joined us. Now that even the private sector banks will be there. So I hope that there will be something which will emerge on the liability side so that we are able to link on some of the liabilities at least. The options always are, of course, savings bank we did actually. What more can be done is something that will have to be examined. Bulk deposit is one option. I think there are small savers for whom probably linking to a floating rate doesn't make sense. But for the bulk deposits, maybe with a cutoff of 2 crore or 10 crore or 100 crore or whatever it is actually, if you link them to the floating rate, So it will help the bank to do the transmission on both sides of the balance sheet.
Mr. Gupta, the other thing everyone is saying that banks will have to hedge interest rate risk via various products that are available in the market. Requesting your understanding, sir, on what are the products that are available to hedge interest rate risk. Also, given the low volumes in some of these markets right now, would it be feasible for banks to actually use these products to hedge interest rate risk?
Yeah, I think all those options are getting discussed, but ultimately what will happen is if all the banks are on the one side of the hedging actually, then who provides you the cover on the other side, and how deep the market is, how much the banks can really cover under that, then what impact it has on the balance sheet when your loans probably don't get marked to market, but your hedges get marked to market. So what volatility it brings onto your balance sheet. So those are some of the things which as a bank we'll have to look into before we go and do any of those things.
One last question, Mr. Gupta. Right now we are in a falling interest rate environment, so I know everybody is focused on the fact that interest rates will fall, but interest rates will turn around as well. So it's important to realize that this works on both sides. In a rising interest rate scenario, banks will benefit, but customers will lose more quickly.
Absolutely. I think it works both ways actually. So that is why, even though we introduced the repo linked product, we found that borrowers continued to prefer the MCLR linked product because they felt that, there was more certainty of their EMIs or the installments they have to pay. Obviously, right now we are in a falling interest rate scenario, so everybody is excited about it. But I think the moment interest rates are moving the other way, so that is when we'll have to see how it goes actually.
All right, Mr. Gupta, thank you so much for joining us. Appreciate your time, sir.
That's a view from State Bank of India. Well, let's move on. Here's a Bloomberg exclusive. Bajaj Finance has picked bankers for its proposed $1 billion share sale. Rahul Saticha, Bloomberg News is here with more details on this one. Rahul.
Yeah, Harsha, you're right. Bajaj Finance has picked up banks for $1 billion share sale. Banks including Nomura and Kotak Mahindra Bank have been selected. JM Financial has also been selected, and many more arrangers can be added going forward. So the company is planning to complete the share sale by December. That's what we know. This is coming at a good time for Bajaj Finance, especially the liquidity crunch we are seeing for its peers. But we have to remember that deliberations are ongoing and the details could change.
All right.
Jet Airways lenders have shortlisted 2 entities to proceed with bidding for the airline while disqualifying the third firm that had expressed initial interest. Vishwanath Nair is joining us with the details. Vishwanath.
Right, Ira. So, as you said, there are 2 participants who have been taken to the next level, which is they will now create a final resolution plan for Jet Airways. These are essentially Synergy Group, which is a South America-based conglomerate, as well as RA Created Fund, which is a Russian fund, which will work on get access to the data room that the lenders have created for Jet Airways, as well as create a final resolution plan. Now, a third bidder who had expressed initial interest, Avantolo Group, which is a Panama-based investor, they have been barred from participating in this process because the lenders have been repeatedly seeking their eligibility documents from these bidders, which they have not yet furnished. So finally, on Tuesday, when the lenders met to decide their provisional list of bidders, they decided to keep this bidder out of the entire process. Now, the lenders have already extended the EOI process 3 times over the course of this insolvency proceeding at Jet Airways. The final deadline ended on the 31st of August. Since then, there have been no new bidders apart from these 3 that we mentioned. There was the Vedanta Group, founders family fund, Vulcan Investment, which was showing some initial interest, but they pulled out in about 2 days, citing that this was only exploratory in nature, then they're not going to proceed with it. It is important to note that Jet Airways has gone through a similar process before the insolvency proceeding started. There were finally no bidders on the table. People who were discussing with the lenders eventually had to back out. So we still need to see what these 2 bidders who have finally been shortlisted by the lenders, what is the kind of plan they come up with, and whether the lenders are okay with the kind of haircuts that these bidders will, propose as part of their plan.
Vishwanath, thank you for that. Let's shift focus now to what's going on in Hong Kong. Carrie Lam formally withdrew the controversial extradition bill that sparked protests lasting 10 weeks. But protesters are still out there on the street insisting that other demands also be met. Bloomberg's Yvonne Mann reports.
Well, it is Carrie Lam's biggest concession yet since this movement began back in June. But you heard her in that soundbite as well in that somber televised address yesterday that this goes beyond just this bill right now, the discontent that there is in the city still at the moment. So protesters, even before this address, after reports learning that they might fully scrap this, came out and said that that is not enough. They want all 5 of their demands met, not one less. Where they say that Carrie Lam did not go far enough was she didn't grant amnesty to those who were arrested and charged with crimes in the last 13 weeks. She says because essentially they did break the law, and she didn't go far enough to set up an independent committee to investigate police's handling of these protests. She did, in fact, though, add 2 new members to the existing committee, but protesters say this group itself is mainly dominated by pro-government members, so it may not be able to do much. And perhaps most significant is that she ruled out universal suffrage, which this proposal Beijing explicitly ruled out already earlier this week. But Carrie Lam reiterating, saying this does take more discussion without polarizing society, and ultimately it is Beijing who decides on this very issue. But as you mentioned, too little, too late. One protester put it out this way, saying that this move by Carrie Lam was a band-aid to rotting flesh.
UK Prime Minister Boris Johnson has lost yet another vote in the British Parliament. He's failed in his attempt to trigger a snap election shortly after members blocked a no-deal Brexit. Bloomberg Sebastian Selleck reports from London.
You've certainly got many who are pro-Brexit or pro-no-deal Brexit in the Lords who can talk this one out. They can filibuster, and that's indeed what they are doing. The plan is just to keep talking until they run out of time. The hope for those who are anti-the plan, anti-Boris Johnson's plan, is to get this one through. Then we have some sort of guarantee of no deal being averted, because then you get the letter going to the EU requesting a delay until January the 31st, a 3-month delay there, unless a deal can be struck in Parliament by the 19th of October or a no deal is agreed on. Both of those varying levels of unlikely. Boris Johnson, he calls this a surrender bill. He says this really undermines his negotiating position with the EU, and so he tried for that election, but Parliament said no. He needed that 2/3 majority. He didn't get it, which in any other time would be unthinkable, that the opposition would say no, we don't want an election. But the Labour Party is making it quite clear they want to get this sorted first. We heard from Jeremy Corbyn earlier on. He says the offer of the election today is a bit like the offer of an apple to Snow White by the Wicked Queen. He says because that's what he's offering. It's not an apple or even an election, but the poison of no deal. John McDonnell, the shadow Treasury Secretary, saying that Labour desperately wants a general election, and that has certainly been the messaging for quite some while, since that near miss for Labour in the 2017 election. But on this occasion, they want to get this crisis averted first.
Sebastian Selleck, many thanks indeed. Out of time on the show. Thank you so much for joining us.